Today, I want to talk about how Antara have just revealed their true colours with a massive put position. I also want to explain how a reverse split is not inherently bad, but how Adam Aron could end up making a huge mess depending what he does post-split. So stay tuned and let's make some money. And now I'm going to dive straight in with the key information. So let's start by talking about Antara and their giant put position that's just been revealed from their latest 13F filings. In the past, Antara has held a large amount of APE and AMC shares, but it was always rumoured they had a giant short or put position just waiting to be uncovered. We knew they had tons of total return swaps, which I touched on in previous videos, explaining how these total return swaps was likely a hidden short position. But now Antara has just revealed their giant put option position, holding 55 million shares worth of puts at a value of $277 million. This is a $250 million position that's actually larger than Vanguard, Citigroup and Susquehanna's positions too. But we can see that both Antara and Citigroup have giant put positions with a total value of over $400 million. So it seems that actually both Antara and Citigroup have revealed a massive put position betting against AMC. Now I want to talk about why these funds are betting against AMC and explain why a reverse split isn't inherently bad depending on what Adam Aron does. So Travis explains that a reverse split is actually good for the squeeze because it reduces the overall float, which can make a stock more volatile, just like GameStop. Travis tweeted saying stocks with floats underneath 10 million shares run ridiculously fast. That's because there's few shares available, and if shorts need to cover, they will pay higher and higher prices just to obtain a few simple shares. Obviously, when there's a giant float, these shorts can easily obtain shares without really looking too far because there's an abundance of available shares. But when the float is smaller, these shares are harder to come by and therefore the shorts have to pay more money for each share. He said he's talking from 20 cents to $80 per share in a matter of days, just like we've seen with some of these overseas Chinese IPOs. But stocks with floats over 1 billion shares take tons of volume to make a small 10% move, just because there's so many shares available. And we can actually show a perfect example just by looking at a few companies like GameStop, AMC, Nokia, Tesla and Apple, for example. AMC obviously has a significantly larger float than GameStop, especially when GameStop has already done that 3-for-1 or 4-for-1 stock dividend. And that is why back in January of 2021, GameStop ran up over $400 when AMC only ran to $70 or slightly above $70 because the GameStop float was significantly smaller. And that's also why, for example, Apple only ever has 1 or 2% moves, sometimes 4% in a single day because they have 15 billion shares. That's obviously a 10 times larger float than the AMC float and around 50 times larger than the GameStop float. And that is why a reverse split is inherently good for the squeeze, because when a stock has a lower float, it's got a higher sensitivity to supply and demand changes. And therefore, if you want the stock to move dramatically, you want a lower float. But as Hang Loose explains, it does also depend on what Adam Aron actually does post-split. Guys, be sure to sign up to Moomoo, the sponsor of today's video, by signing up using the link in the description below. You can currently get up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use and it's very clear and concise. Hang Loose tweeted saying that AMC has access to dilute 4 billion shares or 400 million shares after the reverse split without needing authorization, assuming the lawsuit settles. While this is technically correct, it's not 100% accurate because Adam Aron already has the ability to dilute with 4 billion APE shares. Adam Aron doesn't need this reverse split to go through. Even without the reverse split, Adam Aron can still issue 4 billion APE shares and dilute the APE float significantly. But he has also said the only way shorts can get shares for $5 or below to close out of their AMC short positions is if AMC does a dilution. Now obviously, as I've spoken about in previous videos, I have said that AMC has a huge cash position and AMC will soon become cash generative and therefore should not need to do any more dilutions. They should not need to issue any more AMC shares. Hang Loose accurately says is what they don't want you to know is that dilution allows these shorts to cover for pennies and strips away value from your shares. And that's why I've said the reverse split is not inherently bad for the squeeze, because it creates a smaller float. But obviously if Adam Aron does decide to dilute AMC further, it does give the shorts an opportunity to buy AMC shares on the cheap. However, as I've also said, because of AMC's strong cash position, Adam Aron should not need to dilute AMC further. Adam Aron has said he wants to perform this reverse split to remove the arbitrage between APE and AMC, aka removing that price difference, actually increasing our shareholder value. I just hope that Adam Aron sticks to his word and does this reverse split to remove that price arbitrage, not so he can dilute AMC further. Hang Loose accurately added by saying, with the trajectory and growth over the past couple of years, with added revenue streams and with movies coming back, there is no need for more dilution. Hang Loose also spoke about Antara's giant put position by saying it's more than 10% of their overall portfolio, which is massive in terms of allocation of assets. More than 1 or 2% is a pretty big deal for these institutions. And he said, considering the fact that AMC helped them make hundreds of millions off the APE deal, this situation is starting to smell super fishy. Now, BulletShaped Tweet is saying, I can't seem to understand one thing specifically. He said, why do people that are mad at Adam Aron stick around and talk down about him? He said, why don't they sell and move on or go to court on their own? Why do they need us to hear them out? Now, while I do think that Adam Aron is in quite a make or break situation at the moment, I do also think that if you believe the reverse split kills the AMC squeeze, then why are you still here? If you've lost faith in the squeeze and you don't believe the squeeze will ever happen, if you don't believe that any of these hedge funds will go bankrupt and end up being margin called, then why are you still here? There's obviously a lot of people out there that do have an agenda against the AMC squeeze and want to try and convince other people to sell their shares to obviously give hedge funds an easy way out. And therefore I think it's important to realise that if you yourself have lost confidence on the squeeze, you can leave at any point. But obviously beware of those people in the comments trying to convince you to sell your shares, because obviously they're just trying to help these hedge funds. I also saw this great tweet from Papa. He said every single CEO that was against naked shorting blew smoke up our asses, saying they were looking into it. 30 days later, 60 days later, 90 days later, or even more in some instances, none of these CEOs have done anything about naked shorting, and none of these stocks have experienced a squeeze. There was tons of CEOs that supposedly came together to defeat these naked shorts and enlisted all of these different firms like Share Intel, and actually nothing ended up happening to their stocks. Their stocks continued to decline, and these CEOs just ended up making a quick buck by issuing new shares. And that's why you need to be careful not to be hoodwinked by any of these CEOs supposedly against naked shorting that are just trying to make some quick money off of you. Now finally, I wanted to touch on this quick lawsuit about Citadel Securities being caught for wash trading and manipulating stock prices. It says that Citadel engaged in wash sales 502,000 times using its computer algorithms. A wash sale is where the buyer and the seller are the same entity and no change in beneficial ownership occurs. Wash sales are illegal because they can manipulate stock prices up or down, and Citadel paid a $115,000 fine for those 502,000 violations. Again, it's disgusting that Citadel is only paying such a small fine for such a massive amount of violations, proving that Citadel does indeed manipulate stock prices down by issuing ladder attacks. Obviously, wash sales, or buying and selling a stock within quick succession, is a way to ladder a price down, obviously manipulating that price downwards. Obviously, this is something that Citadel engages in, and it's how the price of AMC has been dropped so significantly over a relatively short period of time. Because obviously we know the price of AMC has not fallen due to retail investors selling, as there's still 3.8 million retail investors holding AMC. But what we also know is that because retail investors have not sold their shares, these shorts cannot escape their short positions because of these hundreds of millions, if not billions, of synthetic shares they've created and still need to buy back. We know the only way these shorts can win is if AMC goes bankrupt and is removed from the New York Stock Exchange, just like what's currently happening to Bed Bath & Beyond. And that's why we need to expose the number of synthetic shares in court, so these courts can enforce Citadel and effectively the DTCC and the SEC to close out of all of these illegal short positions. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell. because that way you'll be alerted when I upload a new video. Cheers.